Hey, this is Doug, your realtor here in Utah, and I'm with Brian Crist, Mr. Mortgage in Utah.
Mr. Mortgage. That's not
Mr.
bad.
Mortgage.
Yeah.
So we wanted to get together and talk a little bit about some things that are going on. So in the world of real estate right now, on the mortgage side of things, our federal government has decided that it's time to make some alterations to some of the way that they do things. And rather than guess and I've talked to a couple different people, but rather than guess and try to assume, I thought, well, let's get with Brian. Brian knows all. So let's get with Brian and see what's actually going on, get the actual scoop so that we can help navigate and move forward. So Brian, help us figure this out.
Yeah,
what are they doing?
It's a little confusing. So the federal government, effectively, their policies control, to a great degree, costs of mortgages.
Okay.
But I'm coming here with good federal government news. They've done some good things, Doug.
What?
Yes, it's true. They've actually done some good things. So they've done three main things we'll talk about here in a second. But let's get to the first one. The first one, and this is where I've heard most of the hubbub online and people talking about, and I've gotten a lot of calls that people are really concerned about, which is when you get a mortgage, your credit score, among other things, how much you put down on a purchase, for example. If you put down 5% or 0 or 10% or whatever, in correlation with your credit score will determine what interest rate and what costs you have, what you have to pay, right? So the higher the credit score, the cheaper your loan is going to be, generally speaking, right?
Well, and I think the costs of it are the things that people don't understand.
Yeah.
They just assume that, well, my credit score at 720 equals this interest rate.
Right.
And that's not correct.
Right. There's the simple explanation is every interest rate on any given day or moment, depending on the day, every day has a cost to it. So the lower the interest rate, the higher. So you have a lower rate, the higher the cost, and vice versa. And so what the federal government does is they say, okay, if you have a certain credit score, you're going to pay a little bit extra, or you're going to have a higher interest rate, and so forth. So what you want to do, that's what we do, is we figure out the best mix for that. But what the government's done is they have made some changes to the schedule where we have to go off of for our rates, right? So one thing they've done, and this just is going into effect about now. I won't go into the details, but it's basically going to effect now. And what it is
which, if I may, is different than what I heard from a couple of people. So I heard that it was going to start May 1st, but talking to Mr. Mortgage, it's already in place and it goes into effect if you close after May 1st.
Well,
right?
it's crazier than that.
Okay.
It's for all the loans that get delivered to Fannie Mae and Freddie Mac, the agencies. We call it the agencies.
The agency?
Yeah.
Okay.
On or after that date in May.
Okay.
So loans take a month or two to get delivered. So we're kind of there anyway right now, basically.
Okay.
So what it is, no, you're right. So it adds more confusion. And if you really want to be confused, by the way, Google it. Holy mackerel.
No, don't Google
Don't do that. You'll get more information than you can ever imagine. But here's the first thing they've done. First thing they've done, and this is the not great thing, depending on what your credit score is. So what they've done is, it used to be, if I have a client and I'd say, okay, your credit, let's use Doug as an example. Hey, Doug, your credit score is 755. That's an awesome score. And as you know, the highest credit tier is 740 and above. Right? So we wouldn't mess with it. We said, don't do anything. Don't panic. It's great. You're in the highest tier. Well, what the government's done is they said, okay, we're going to add tiers. We're going to say the top tier is not 740. It's now 780. And they go down to these 20-point chunks to call them tiers. So 780, 760, 740, 720, and 700 on down. So what I would do now is I'd say, my new conversation now is, Doug, congratulations, your credit score is great. However, if we can get you to 760 or higher, or even 780 or higher, that would make me happier. make you happier. It'd be a little bit cheaper. And you're talking $500, $1,000, $2,000 sometimes in difference. So we would want to do some credit adjustments. We'll talk about that maybe in a different video. But so that's what has changed. So for higher credit score people, your rate / cost is going to be a little worse than it would have been on the old schedule.
Okay.
But it's not, I wouldn't lose any sleep over it. It's not dramatically high, but it is higher. It's going to require some more adjustment of credit scores to get the most favorable term. So that's one thing. The second thing they've done is they said, okay, people with lower credit scores, we're going to make it cheaper than it was. And these changes are a little more dramatic. So if you're at a 680, 660 credit score, you're talking 0.5% in interest rate better than it would have been on the previous schedule. So there's some good and bad to it, depending on your credit score. Now, that's the first kind of big chunk they've done. The second thing they've done is the whole initiative is from the government is saying we want to help make housing more affordable for everybody. That's really kind of the idea. And so, as you know, with government, it's all based on income limits and things like that. The problem we've had with a lot of these income initiatives or low to moderate income programs is people, especially here in Utah, they make enough money to qualify for the house, but they make too much to qualify for any incentives or help, be that a down payment assistance or an interest rate reduction assistance or something like that. So what the new program is now that if you're a first-time home buyer, these adjustments to the rate that make the rate worse, regardless of your credit score, they go away. They're just gone. If you make under the area's median income, which in Utah County, the number that we use is about $100,000. So if the income we're using to qualify you, not what your entire household makes, not everybody, just whoever's on the loan and we're using for income,
okay,
then you're talking of significant difference. I ran a whole bunch of different. We've been running cases, and he's talking to people, of course, over the last month or so. About the average difference is about 0.3%, 0.5% range. It's not small. So if you were to buy a house, Doug, at $400,000, that's about $120 a month difference. That's a lot.
That's a lot.
That's a lot. And the only requirements are first-time home buyer, meaning you haven't owned a home in 3 years. That's it.
Right.
And you have to make under that roughly $100,000 mark, depending on what county you're in. It changes a little bit, but it's about $100,000. So that's pretty cool. That's the second thing. The third thing, which does not involve conventional loans. Now you've got conventional, which is just a normal mortgage, goes to Fannie Mae, Freddie Mac, the agencies.
Right. The agents.
we love that. The other ones are FHA, VA, and rural housing. But let's talk about FHA.
Okay.
FHA has done something very simple. They've reduced the PMI, or the monthly mortgage insurance, which is what you pay on all FHA loans, from 0.85 to 0.55 on most loans. You're pretty much all of them. So that's about 0.3% in interest rate, and on a $400,000 house, that's $100.
It's $100. The other thing, didn't they also eliminate? It's not for the life of the loan anymore, isn't it? Don't they have a time period on it now?
It depends on how much you put down.
Okay.
So if you put the minimum down, it's still lifetime. If you put more down, it's 11 years. But generally speaking, it's going to be for the life of the loan. Now, Utah housing, the most popular of all the Utah housing, and the Utah housing, and Doug knows this, of course, is that it's a down payment assistance program. So you can get into a home for zero out of pocket, really, with Utah housing. We do those all the time. The FHA Utah housing will also have that lower end mortgage insurance.
That's great.
Which is huge, yeah.
Yeah, that's great. Because usually your first-time home buyers, it really is about that monthly payment, as much as it is how much the house costs.
Yeah.
Because usually they're right there with the debt-to-income ratios and everything. They're really looking at, and they're tight.
Yeah.
So to save $100 is fantastic.
Yeah. In fact, and also think about this: we have a lot of clients who are looking for a home they can qualify for up to, say, $300,000, and that's right. That's tough. That's kind of hard sometimes.
That's real tough.
Yeah, but that same buyer, a home buyer, that guy's able to qualify now for 320, 325,
which is better.
which is that's a big difference.
Yeah,
for a lot of people, and depending on what they're looking at.
yeah,
Yeah, you bet. Yeah, so those are the three big changes. They're pretty much good.
Pretty much good. So if you've got a great credit score, you're helping to offset some of the people with lower credit scores. So
thank you for that.
Yeah, thank you. I guess, help somebody with a hand up. Great things coming out with FHA.
Yeah, that's big.
That's big.
Huge.
That's big. So bottom line is we've gone through this discussion and Brian's broke it down for us. The key takeaway for me is in the real estate world is it is critical that you work with somebody that knows what is going on. So to have Brian be able to navigate, between conventional and FHA and really figure out what's best for you is going to be really an important thing. Almost, your home is one of your most, your largest purchases and the biggest asset that you'll have. And so to be able to have that professional help you on the mortgage side is almost as critical as having the best heart surgeon operate, rather than trying to operate yourself in the kitchen.
Although I did know a dentist who did his own root canal.
Wow, that's not good.
Yeah, he's pretty proud of that.
So anyway, you're going to hear a whole bunch of negative chatter and different things like that. A lot of the sky is falling when it comes to mortgage rates. There are ways to navigate around it. Get with your professional. Get with your professional realtor. Get with your professional mortgage guy. Mr. Mortgage himself here. But don't listen to your crazy uncle. Those crazy uncles, and we've talked about that a lot, that your crazy uncle just doesn't know. We're not in a bubble. We're not, the sky is not falling. We're not going to all of a sudden implode. You can get through this, and it's time. With real estate, it really is, if you're thinking about it and you've got things financially set, it really is time to go now, because there are things changing every day. So let's get you in, get you locked in. Let's find you a house, and let's get you taken care of.
Yep.
All right. Thanks, Brian.
You got it.